Hello, and thank everybody for joining me today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. Today, I'm going to give you a quick update on the interest rates that are used to calculate the ExxonMobil pension lump sum. We actually just got the release of the September interest rates this morning, so that'll give us the information we need to give you a calculation for the first quarter of 2023. We'll go through that and we'll go through a comparison of the fourth quarter here in 2022 and a little bit of a history of the rates as well. Before I get started, I just want to remind everybody that the Retirement Group, we are not affiliated with, nor are we employed by ExxonMobil. However, we've been working with ExxonMobil employees for quite a while. We are an independent financial advisory firm that focuses on working with corporate employees and helping them transition into retirement. With ExxonMobil specifically, a lot of items we cover are going to be pension reviews, looking at the 401k, NUA reviews, whether it be life insurance questions, the retiree medical. We go through all that information, but ultimately speaking, one of the best things you can take us up on is our complementary cash flow analysis. Even if you've done one and it's been about 6 months, things have changed dramatically over the last year or so, so it's good to actually look at getting an update on that as well. But we do have offices throughout the country, so rest assured if you need to sit down with myself or one of the other advisors across America, we can still accommodate that. But obviously this day and age, we can do web meetings, phone calls, emails, all that's available as well. But let's go ahead and get into what everybody's concerned about, and that's the interest rates and how this is going to affect my lump sum. And we've been giving you updates on these every quarter, so most of you, if you've been on one of these updates, you do know what's been happening. And we've been talking about this for a while, about interest rates potentially moving up in 2022. However, they came up so severely and so quickly that we saw some of the biggest drops we've ever seen in the lump sums for ExxonMobil pension plans. Now, if we look at the seesaw here on the top, the quick correlation is going to be when interest rates rise, which is happening right now. We're going to see a drop in the lump sums. We actually saw the opposite during the pandemic, and we were working with a lot of ExxonMobil employees telling them to actually hold off and defer commencing their benefits if they're going for the lump sum, because we saw those interest rates actually coming down. So what happened is when interest rates came down, it drove up that lump sum. Now the opposite's happening. Those interest rates are coming up and driving down those lump sums. However, they're coming up very, very quickly, and a lot of that movement has already taken place in the first 3 quarters of this year. And we assumed that that was going to be some of the biggest changes. However, the interest rate update we just got this morning from August to September is the biggest jump we've ever seen in a single month. So it's actually continued to cause this decline in lump sum interest rates. We actually saw those segment rates that they use for the conversion factor, cap out in June. They came down a little bit in July and August, and then they shot back up here in September. So what happens is for ExxonMobil, if you're not grandfather, which most of you aren't, you got to be about 65 years old at this point and have been there for about 25 years to be grandfathered. So if you're not grandfathered, they use what's called the Pension Protection Act segment rate. So there's the first, second, and third segment. The first segment actually covers the first 5 years of retirement. Second segment covers years 6 through 20. And the third segment covers years 21 and beyond. So for most of us, that second segment is going to have one of the highest weightings because it covers about 15 years of retirement. So we're going to take a look at that and kind of give you some the ins and outs of what's been going on here historically. So let's go ahead and kind of zoom in here on this chart. If we look at the interest rates for August and September, those are actually used to calculate the first quarter in 2023. So if we look at that first line in blue, Q1 2023 blended rates, we're looking at 4.14% for the first segment, 4.94% for the second, and 4.88% for the third segment. If we look at that one line below there, the fourth quarter this year, where they are right now if you commit your benefits, that was 3.44, 4.7, and 4.74. If you go down a couple lines to where we see that fourth quarter to first quarter change, you can see that jump of about 70 basis points in the first segment, 24 basis points in the second segment, and 14 basis points in the third segment. But if we look at that, if we look at the actual first quarter last year to first quarter this year, 2022. Versus first quarter next year, you can see how much more severe those changes are going to be. When we look at that second segment, it's actually up 2.41 percentage points. So what does that mean to you? Essentially, it's going to depend upon your age, but usually whenever we see about a 1% change in interest rates, that's going to correlate to anywhere from an 8 to a 12% change in your lump sum. So let's just say 1% equals 10%. So in this case, if you're looking at your lump sum in the first quarter of 2022, and decide to stay on and you were going to go in the first quarter of 2023, that change of 2.41% could equate to about a 24% drop in your lump sum. So if you had $1 million lump sum, that could actually drop by about $240,000. If you had a $500,000 lump sum, drop by about 120. So these are not numbers to shy away from. And we've been talking to individuals about this quarter by quarter, and we saw a lot of people actually leave in the second quarter of this year because that was one of the bigger jumps that we saw. We assumed we're looking at things to level off here, but unfortunately that's not the case. We're seeing another drop here in the from the fourth quarter to the first quarter. So if you were still hanging on the fence and you had questions about reviewing your lump sum, give us a call. We can actually run through those numbers. And keep in mind, again, these interest rates are only affecting you if you're looking at taking the lump sum. If you're taking the annuity, it has no effect on you whatsoever. So again, we can always run that cash flow analysis to compare the differences between the annuity versus the lump sum. And then also keep in mind that by going through that cash flow analysis, one unique feature that ExxonMobil came about with about 7 years ago was the ability to split your pension. So you can actually do a 50-50 or 25-75% breakdown between a lump sum and an annuity. So we can go through all those different options by running that cash flow analysis or updating it. But ultimately speaking, that cash flow report is going to give you a better idea of where you stand right now and what things look like, not just now, but 10, 20, 30, 40 years down the road as well when we factor in these decisions. So anybody's got questions on this, especially also if you had questions about the grandfather rate, I kind of skipped over that because there's not that many people affected by it, but that stayed level for the fourth quarter versus first quarter. But just simply give us a call and we can go through all these questions for you. You can reach us at 1-800-900-5867. You can also email us at info@theretirementgroup.com. I'll keep this up here for a second for you to hold your phone up. If you want to use one of these QR codes, you can actually schedule an appointment with myself or one of the other advisors across America. Or you can also go in there and follow us on our LinkedIn page specific to ExxonMobil, so that way you get updates like this and updates on plan changes and things like that that we send out from time to time. But I do want to remind everybody again, even though we've got an extensive understanding of this and we're here to help walk you through it, we are not employed by ExxonMobil, nor are we endorsed by them. But again, any questions you have, we can go through not just the pension plan, but also the 401k plan, talking about NUA, talking about how the stocks changed as well, and any other questions you have related to the retirement planning process. So I thank you for joining me for this quick update. And again, any questions, call us at 1-800-900-5867. Thank you very much, and I hope you have a great day.